Hey Bulls and Bears, we're looking at a residence here listed at Zillow. Only $8,000 a month at a 7% mortgage rate, $450,000 for this beautiful home. Some of you may be saying, not funny, not funny. Others, some of you, may be laughing a little bit because there have been listings that weren't too much better than this home here. Hey everybody, it's JJ, and back with another dose of real estate reality today. Real estate reality, which is economic reality, because as the real estate market goes, as housing goes, so does the economy. So let's get into the housing bubble news. Is the bubble bursting? Are things still weakening, or are things leveling off? Well, actually, things are continuing to decline in the housing market. We're going to talk about prices, inventory, sales data, and the trajectory of this housing market. Let's go ahead and get into it right now. Let's start right here. Mortgage refinancing drops to a 22-year low. So yes, you read that right. Things are worse now than during the 2007-2008 bursting of that housing bubble, which was going on 14 years ago now. This was a 14-year bull run in the housing market. Technically, it leveled out 2011-12. Prices started leveling out, started rising early to mid 2012, if I remember correctly. But we're looking at over 10 years of a housing boom that is now reversed. High mortgage rates, a consumer that's tapped out or beyond tapped out. Many people are at the edge financially. Home buyers dropping out of the purchases. 1 in 6 home purchase contracts. Buyers are walking away. So things are not getting better. Things continue to decline. And that means we're going to see further weakening in home prices and the housing bubble continue to deflate. So some of you may be saying, wait a minute, JJ, the news guy, the 6 o'clock news guy told me that we were in an economic recovery. So what's happening? I thought everybody had a ton of money. The unemployment rate was low. Why would 1 in 6 people be walking away from a home purchase contract? Everybody should have plenty of money. So why would a higher mortgage rate affect such a strong economy? Why would it affect people? Well, here is the reality. Home purchase cancellations are above 15%. That is about 1 in 6 for the second straight month. So things are not getting better. Things continue to decelerate or decline. If you look at prices, things are declining. Prices are coming down overall. And some of these buyers are going to face repercussions because you, in many cases, are going to lose your deposit. So people are still walking away. 1 in 6 home buyers walking away. Part of it, I think, is fear of catching the falling knife. Not many people want to buy in a declining market. What if you buy? Then all of a sudden you're underwater. You cannot refinance. Also, many people are looking at the mortgage payment and they're looking at their own personal finances. And we know that so many people are in record levels of debt now, about 7 in 10 people. And they're saying, hey, I can't afford this payment. Or if I can afford it, I may not be able to afford it for long because my savings, people's savings accounts are being drained just to keep up with this cost of living. So yes, there's a lot of fear out there, and this fear is not going to go away anytime soon. And in fact, it could get a lot worse very soon. And with the mortgage rate over 6.5% now, and Bank of America is predicting it's going to be 7% mortgage rates very soon. And I think that could happen. Other people are out there predicting it could be 9-10% here in the next 6 to 12 months. So if that does happen, if rates are allowed to rise, yes, we're going to see more weakness in the housing markets. Even if rates don't rise, even if rates stay where they're at right now, as far as I can see, we're going to see continued weakness. Why? Because people are going broke. Most people not keeping up with the cost of living, and less people qualified to afford these bubble mortgage payments. This housing market is a monster bubble, a mega bubble, way worse than we saw in 2007, 2008. But thankfully, either one, they were forced to raise rates, or two, they just decided to bring down this housing market finally. Also, home builders are backing out of some contracts, some new developments. They're canceling some developments. And the lower demand has lumber prices falling now. Lumber prices fall to a new 2022 low. And take a look at this. Lumber prices are down 64% year to date and down 76% from the all-time high that was reached in May 2021. So a big, huge turn with lumber and the housing market. And Bankrate is reporting and other outlets are reporting that home prices are decelerating by a record amount. Now you hear the word decelerating and it makes it sound like prices are still going up, just not as fast. So like a deceleration in the increase. That's actually not what's happening. Prices are actually dropping. So a better headline would have been prices are dropping at a record pace. And we explained this in one of our previous videos, but prices are dropping and the headline should be more appropriate. But if you look at the year over year number, it is a deceleration, meaning home prices are still up year over year, just not up as much as previous months when we looked at the year over year number. But month over month for the last 3 months, prices are dropping, not just decelerating, but falling. And this housing bubble deflation, as I'd like to call it here, is being described by Wolf Richter over at Wolf Street as housing bubble woes. Home builders cut prices, pile on incentives amid plunging traffic of buyers, spiking cancellations, what we just talked about a few minutes ago, and holy moly mortgage rates. In the NAHB index, traffic of prospective home buyers has plunged, and Wolf Richter, as usual, gives us a beautiful chart here that shows the plunge in 2020, of course, with the emergence of the health crisis, the shutdowns, etc., and then the spike up because of the demand, the work from home, all of the intervention in the housing market. But that euphoria has faded, and now we see the plunge, and hopefully we'll surpass what we saw or what was initiated in 2020. Hopefully we'll continue to see the plunge, that there won't be any more intervention or any reversals of what's happening right now. Right? So no one that I know of has a crystal ball. Could they come out next month and say all foreclosures are going to be canceled because they see the weakness in the housing market? Sure, they could do that. They could pass some silly law. But as far as I know, no one has a crystal ball, so we can't see that happening. I really hope that doesn't happen. It really wouldn't surprise me if it did happen. But if things continue as they are right now without any silly intervention rescue programs for this market, the housing bubble will continue to deflate and decelerate and drop. Now let's talk about prices, and I dug through a lot of different news for you here. New home prices have dropped. 466,300 was the median price for a new home in July. Prices have fallen now, as of the recent month, to 436,800, so about a $30,000 price drop for new homes. And it's likely just the tip of the iceberg. Again, if things continue as they are with these mortgage rates or higher mortgage rates, expect to see more cancellations, more weakness, and yes, more falling prices. Now it appears that some real estate agents are not navigating this market very well. Here's a couple examples. 3040 Forester Avenue or Forester Court, San Diego, $829,000 for a residence just over 1,000 square feet, so a pretty high price. But take a look at the price history on this one and the listing history. So here's what's happened. This one came on the market about 4 months ago at $945,000. Instead of pricing it more appropriately, they went ahead and dropped the price periodically every few weeks down to $829,000 now. So from $945 to $829, and my guess is if they would have put this on the market back in May at $829, it probably would have sold. But since then, the market has softened and prices have dropped, and buyers have become even more scared now than they were back in May. So instead of pricing it appropriately, now they've just followed the market down, and it's still sitting on the market after 4 months for $829,000. Will they have to drop it even more? It's over a $100,000 price drop so far. Here's another example of something similar. Twain Avenue, San Diego, $1,031,000 for a 1,700 square foot home. So $1,031,000. But if you look at the initial listing, also back in May, it was $1,132,000. So from $1,132,000 now over 4 months later to $1,031,000. Another one with over a $100,000 price drop. And if they don't price this lower more quickly, they're going to continue to chase the market down. And I'm not sure if the real estate agent came up with this plan on just dropping the price a few $1,000s every few weeks, or maybe it was the sellers or the homeowners plan to do it this way. But a lot of these agents need to get more aggressive on the price cuts in order to get these homes off the market. All right, so bottom line analysis here, the housing market will continue to soften and the bubble will continue to deflate. Definitely not a crash unless some surprise event pops out of left field. No crash, but a steady, controlled decline / collapse of the housing market. Hope everyone liked this update. Thank you for being here. Please like, subscribe if you like what we talk about on this channel, and come back for more economic, financial news. Hope to see you all very soon. Bye for now. Peace.